We are now 3 minutes away from the closing bell ringing. Markets are hitting session lows. Remember, today is triple witching. Lots of volatility out there. Estimates say the expiration tally is $6.4 trillion. That's according to Spot Gamma. Worst day in the 2 months for the S&P 500 and NASDAQ that we have seen. As you can see, Dow down 420, S&P down 100, NASDAQ down 447. Russ 2000 is down 58 and change. A lot to go through. I want to bring in Horizon Head of Research and Quantitative Strategies, Mike Dickson. Mike, I mean, just give me kind of your broad macro sense of what you're seeing here in these markets. There's inflation concerns. There's more talk about a global recession. We had the Fed decision this week, PPI coming in hotter. There's a lot to kind of process with this.
Yeah, there certainly is. And I think one of the biggest shocks that we kind of got this week, as you mentioned, with the Fed, and really not just the Fed, but global central banks, ECB, in the UK and Japan, basically policymakers really acknowledging that there's a lot of uncertainty here with the persistence of inflation. And the reality is as well that, these central banks are also above their inflation targets and not really operating from a position of strength. And we've seen a very sharp repricing in yield as a result. Now you have the 2-year yield here in the U.S. up 50 basis points from before this conflict started. And I think that's really shaken things out a lot in markets this week. But starting place really matters as well. And economic growth, earnings, the consumer are all in a really healthy place. And this is an oil inflation concern right now, not a growth shock at this point.
Yeah, well, no, and you've still got the average price just under $4 according to AAA for gasoline. But obviously the concern is the more the crude pushes higher, the more you're going to see that flow out to the American consumer and drivers and spring break, et cetera. Let's talk about kind of some other stories here. Look, if you look at what we're seeing with regards to the market, the software sector has been really kind of hit. I had an analyst telling me in a conversation recently that you can't just throw out the entire software sector because of concerns over this AI build out, and that there's going to be winners and losers. What's your take on this?
Yeah, I really agree with that sentiment. And quite frankly, I think that that's a really interesting place to look right now in markets, because, as you mentioned, and really heading up to this Iran conflict, you had that broad software basket is down 30% on the year over, of course, concerns that AI is going to make a lot of these companies irrelevant. And, believe it or not, since this Iran conflict has started, a lot of those stocks in aggregate are up a couple percent. One of the only sectors where that is true. And I think in large part because, all of the sellers have already sold. And so for that broad sector, you're looking at valuations that are sitting basically at a 10-year low, a good bit below the S&P at this point. And I think it's a really good opportunity to start nibbling away at that because the fundamentals, a lot of the earnings growth expectations there are really strong.
Absolutely.